Bill O'Grady is Chief Market Strategist at Confluence Investment Management. He joins us now from St. Louis. Bill, welcome to Bloomberg News. Good to see you again.
Thanks for having me.
Bill, talk to us about what's going on in the oil market today. What are you seeing?
Well, we've had a pretty good run over the past couple of weeks after dipping under $70 briefly. We've been in a trading range really between high 60s to about $84, and we're now testing the high end of that range. There are about three factors we think driving the market right now. The first is that it's becoming evident that the world economy is recovering, and a lot of that recovery is coming from the emerging markets. These markets tend to be more energy intensive, and so their recovery is starting to boost the demand for crude consumption.
Bill, before you continue, might I ask, are we seeing a sense that at least commodities, at least oil, the oil market's looking at equities for direction right now?
Well, they have been for a while. They've also been looking at the currency markets for direction. And in part because there's been this inverse relationship between the dollar and oil and a positive relationship between equities and oil. Equities and oil prices are kind of being driven by the same factor, which is the economy. The currency markets, on the other hand, we're starting to see some of those correlations break down a bit because I think investors are beginning to understand that the dollar doesn't necessarily equal the euro, that just because the euro goes down in value doesn't necessarily mean that should be a bearish factor for oil.
Well, Bill, might I ask you then, with the three reserve currencies, the dollar, the euro, and the yen, looking at least a little bit suspect at this point, is that an incentive for investors to turn to commodities?
We think it is. For a while, the euro became the proxy for all those afraid of the dollar and concerns about U.S. monetary and fiscal policy and the problems in the financial system. What the Greek situation has done is revealed the structural inadequacy of the euro that has still not been addressed. And if you assume that money has three factors, three primary services it provides. It acts as an exchange function. It allows us to buy and sell things easily without barter.
Right.
It acts as a number, and then it acts thirdly as a store of value.
Right.
And that store of value function is being undermined, and that's what's driving people to commodities.
Bill, that unsettling environment in the Middle East, is that also having an impact in your opinion?
It's having some, but not all that much yet. I think that the global investing world is still so focused on the financial system here in Europe and in the United States. Also, the Middle East has kind of fallen off the radar screen a bit. But we have been watching steadily escalating tensions with Iran and expect that there to be some sort of catharsis on this issue this year. And expect that this will also end up being a much more bullish factor down the road.
Bill, we have about 30 seconds left. Where do you see oil heading towards the end of the year? Is mid-90s a possibility?
We think mid-90s is a distinct possibility, especially if the emerging market economies continue to recover as they have been. And of course, if we end up with a geopolitical event in the Middle East, mid-90s will probably prove to be quite conservative.
Bill O'Grady, Chief Market Strategist, Confluence Investment Management, joining us this afternoon from St. Louis. Bill, thank you so much. We appreciate it.